we're actually attempting to go live on two different platforms. Hold on for a second here. Hey everybody, it's been a minute. James Peters with Keller Williams, um, Peters Legacy Realty Group, and the real estate, the Atlanta Real Estate Group. Um, Coming to you live here. Today, we're actually coming from my office in Smyrna. Previously, I've done this broadcast at a studio in, near Stone Mountain. Um, so, doing it today from my office, trying to see how that works. Um, Wanted to just touch base with you guys, talk about a few different topics. Um, as we end the year, I put together some lofty goals personally to get folks into homes, um, and had a great 2019 thanks to the help of my clients. That's my 2019 is my first uh, full year really focused on real estate. Was able to put 20 folks into homes, very significant number. Was able to achieve a ranking of top 20% within my office here. And quite honestly, I get so much joy out of helping folks get into homes. The challenge that we face from the housing market is that there are a lot of reasons why folks cannot purchase a home, right? And quite honestly, you can be diligent, manage your credit, get you an advanced degree, and still run into problems because now you have that student loan debt, which counts against your debt to income there, and your ability to get into a home. So I mean, while everybody tries to manage the various parts, obviously, again, trying to be a contributor to society and to get that advanced degree, the hope is to get that advanced degree, and it comes with the ability to get a higher salary. Um, and sometimes that doesn't ring true in the beginning, right? Um, so there are other solutions that that are there to help folks. I ran across one, which is going to be the focus of my discussion today, is the lease to own space. All right. Um, there are some belief. I guess there were some lease programs before that really weren't a good deal for buyer, right? It was a great deal for the landlord, not a good deal for the buyer, for the renter, excuse me. I came across a few programs that I think are better deals now. They provide good incentives for you to get for those who can't get a traditional loan, to do the things they need to do, basically almost like an incubator process while they live in the leased property. So they need to improve their credit. So it will tie them into a credit program. They need to increase their savings. So a portion of their rental payment and the 100% of their down payment gets tied back to their savings. So in the year, 2 years, 3 years, until they graduate from the program, or till they basically end their lease, they'll have the option to increase their savings so they can get into a home. This program, I think, at least the lease to own option is great for a couple different segments of folks. Those, you know, you move into a new area, you're unsure on whether or not you want to buy. And you know, you're unsure where you want, whether or not you want to buy. You have good credit, you have some cash, but you're still not sure if you want to invest in a community. Right? Lease to own gives you that option, kind of delays the purchase decision for a year or 2 years, 3 years. All right, still allows you to lock in a price at a lower at you know at a market rate at the time when you're purchasing. All right, so that you can execute that option later. All right. In the case of, hey, you know what, you got some bumps and bruises in your credit portfolio that's keeping you from purchasing, from qualifying for a loan. You know, I mean, and that happens. Life happens. You know, you can't correct things that happened to you in the past, but you can correct the things that happen to you in the future, right? That's my philosophy. So in those cases, you know, where again, like you've had, let's say you had a bankruptcy 12 months ago. All right, well, you can't get a loan for 24 months with a bankruptcy. All right. Even if you had an eviction 12 months ago, you know, that's still going to play against your ability to get a loan. Because really, I mean, what it is, you know, the bank's not going to give you, a financial institution is not going to give you a loan unless you can prove that you're credit worthy, right? Now, and this is the same with, you know, most lenders, most owners will not rent to you because of some of those same criteria. But I mean, if your credit is on the upswing and meets a certain threshold, right? If you have a certain amount of time in between those negative things like 12 months, this program will work for you. And if you go to my business page, the James Peters Keller Williams agent page, if you can search that, you'll see I put a link in there. I'm going live on both that and my personal page. Hopefully, I'm being broadcast on my normal channel, so we can see that. You see a lot of folks. Monica Charles, hey Monica, how you doing? My brother joined us, and Jenny Rutledge joined us as well. So, yeah, I mean, you know, this program again is going to allow that segment, you know, that with some troubled background, but you know, get into at least start the process on purchasing a home. You know, and there's and excuse me, start the process of purchasing a home, or at least, you know, getting into a home, building up some savings so you can purchase it at the end of the term of the lease. All right. Before I go any further, I wanted to give you, if you guys wanted to call in, the number here is 678-381-1973. That is for the Bended Knee radio program that that should be shared on. You know, I'm actually, right, as I mentioned, I'm here in my office. This is my last broadcast for the year, being that it's the 30th. My next broadcast is going to be the first one of the year. All right. So just to recap, what I'm going to cover today is I am going to cover this down payment, this lease to purchase to own program. The name of the program is Divvy, DIVVY. Go on my business page, and you'll see a link to the program, a referral link. So I need you guys to do that. Give me a call or inbox me if you want to find out more. But I'm gonna give you some of the highlights of the program and try to just kind of cover it in a nutshell. Give you an idea of what it covers, how it can help you if you or if your friends have a friend that needs a way to get into a home in 2020, but not quite ready to purchase. All right. Now, there's definitely some pluses for the utilization of this program. You know, that will benefit you. This program actually is available in a few markets, but Atlanta is one of the markets that they launched in. All right. Again, it's a very consumer-friendly lease to own program. lease option program. All right. The business model they employ is very simple. You know, essentially they charge rent. They help folks become homeowners. All right. They generate their profit. Yours one or what's in it for them? They generate their profit from the rent. All right. But they also a portion of that rent, 25%, goes back into your savings. So they hold that for you. So over the period of time, it allows you to, build up a savings pool while you sleep, right? While you rent. So I mean, it's definitely a way to leverage that. Um, there's no application fees in order to get start the program, so that's definitely a plus. I know some of the other programs I've run into there, the initial hurdle is an application fee, and then only to get declined, right? So this one, there's no application fees. That's going to allow you to, to at least apply for the program. If you go onto my business page, James Peters Keller Williams agent, I'm live on that page as well. You can click on the link for that live, learn more about the program. And I tell you what I like about it. This allows you to choose your own house. So they give you a budget, basically a monthly spend budget. Um, it allows you to pick your own house. The Divvy program will purchase that house. All right. Just like you're buying a house, you still got to put some money down. In this case, it's 2%, but that 2% goes back to you at the end of the term of your lease. So it's basically another way for you to leverage your savings. So you're not putting your money. They really want you to be able to purchase the house at the end of the term of the lease. All right, that is important to them that they're creating homeowners. So they want you to purchase the house at the end of the lease. All right. While you rent, 25% of that rental payment, gets saved up for your down payment for your home. All right. So it's going to force you to save. All right. It's going to force you to save, and that's what quite frankly, sometimes you need that. All right. And you can buy the house back when you are ready. So you can buy it on your timetable. When you've saved enough financially, you can buy it back. Now, let's talk about the first step about choosing the house, right? You can choose from any home for sale from 60,000 to 300,000. Actually, and they basically have set up what those payments are going to be based off of those houses. Some limitations: you can't do condos, you can't do foreclosures. All right, the homes need to be move-in ready. All right, no fixer-uppers. So basically, it's going to be the normal shopping process that you would go through, like you were purchasing a home today. All right. I mean, if we were going out, if you were approved and we were going out looking at houses, it's going to be based off of your budget, based off of what the mortgage company would allow. So it's going to be that same process, but essentially, Divvy will purchase that home. All right. They're going to cover all closing costs on that transaction. So to the seller, it's going to be an all cash transaction. That's pretty powerful, folks, when you think about it from the buyer side. I have a lot of when I represent the seller side. We look at the transactions and we look at all cash as being very nice because you can close that in a shorter amount of time. You don't have to wait 30 days. It can be done in 14 days. All right. So I mean that gives you a little more leverage to go out there and get it. I'm gonna have a little sip of water here. Many of you guys who know me, I do not talk for an hour straight. All right. So me doing this is definitely a little different from the norm, but I appreciate everybody jumping in, checking it out, learning a little bit. My objective is to help folks in 2020 get into home ownership, and I think this is a great way to set it up that, hey, if you're, you feel like you're 2 years away, you feel like you're a year away, all right, 3 years away, this is a way that you can help you with your savings. If your credit is not, normally you need a 620, well, you need a 585, depending on the lender, but really you want to be about a 620 to purchase a home and above. This you're for minimum FICO score of 550, you will qualify for this program. Again, no delinquencies in loans or collections. You still want to have, a decent background from a credit perspective. You got to be willing to move soon. No bankruptcies or bankruptcy to start discharge more than 12 months ago. So you need 12 months distance between the bankruptcies. You need 12 months distance between your evictions. The average income for folks in this program is about 60,000, but it does go lower. All right. And the minimum monthly payment in Atlanta is going to be about 1,200. All right. So you got to be comfortable with paying about 1,200. But it's not like you're going to get your forever home using this. But you'll get yourself a good deal. The benefit of it again is you'll start with the lease option. It's going to set a price based off today's market. All right, and again, if housing as housing prices do over time, they go up. So 3 years out, you'll have you'll have the 2% that you put down originally, all right, to help you close. You'll have 25% of your monthly mortgage payments. All right, so if on 12, I can't even do the math, but on 1,200, you'll have 25% of that. You guys pull out your calculators and do that. Someone text me that. Put that in the link here, the comment link. All right, so you'll have 25% of that times 12, or times 36, depending on if you do it for 3 years. All right, saved up. All right, the objective is to have at least 10% available for your down payment on that home. All right, now 3 years, a lot of things can change. Your credit can improve drastically. You can change jobs and gain additional income, and you may not want to purchase that home that you live in, that you've been doing the lease to own. That's fine. All right, you can opt out of that. You won't get the full 10% back, but you'll get, I want to say it's about 8.25, but we'll check the details on that. But you'll still be able to withdraw from the savings and leverage that in another purchase. So you'll be able to, what that looks like is, hey, you call me up, you say, hey, James, we love the divvy home, but we really want, we're in a better position, both me and the wife, or maybe you added a wife, or maybe you added a husband, but you're both now in a better financial position. So now you want to look at some different options. We can look at those options, and we'll go out just like you're a regular purchaser. We'll, contact Divvy and cancel your lease. Whether or not it has to be at term, we'll figure that all out. But the idea is you'll still be in a position because you spent 3 years incubating, saving money, getting your credit right, and position yourself for more things in the future, as opposed to now being in an apartment, not saving your money, and in 3 years we're having the same conversation that we had in 2019 about buying a home. I really want to have a conversation that, hey, you know what? You guys spent the time, you did the work, you put away the money, you did the things. I love those conversations when I have somebody that came to my home buying seminar. In fact, I have one client that came to my home buying seminar. Credit was in the fours, young man. And he worked hard. I mean, I talked to him this week, and his credit is almost at 700. All right. Now he still, has saving some money for a down payment, but we're going to be able to get him into a home. So this program may not be the best for him, but again, for you, it might be. Let's talk about the 2% down that's required. All right. So all of your divvy, your initial investment goes to the purchase of that future home. That's huge. All right. Yeah. If you were buying a home, FHA is going to require 3.5%. All right. So this 2% is if you were buying a home, is you're going to have to come up with this money. So you shouldn't be shocked about it. But this allows you to save that, put that away out of your pockets. Your ability to, sometimes life happens when you dip into your savings. This puts it away. You can't touch it. Life's going to happen, but you're going to have to use extra funds to handle life's issues. But this puts that away. All right. If, let's say, for instance, you're looking at a divvy home that's 150,000. All right. That means your initial investment is going to be 3,000. That's what you're going to have to put down, which is not a lot. All right. But now you have 2% saved for the future. Just for the record, on 150,000, 3.5%. I want to say it's about 5,200. I got someone do the math for me. I don't have my calculator right here, but so I mean, you're gonna, it's gonna allow you to save some money now. All right. Rent while saving up a down payment. So I mean, that's really kind of what you'll be doing with the payments, right? Your monthly payments, basically 75% of that goes to divvy, the 25% goes to your savings for your down payment program. Excuse me, for the loan lease program. So for your future down payment. So while you have that $3,000 that you put away, now if you're paying $2,000 for your rent, 1,500 goes to the rent, 500 is going towards your savings. So again, that's today if you're paying $2,000 for rent, how much is that going towards savings? How much of that do you get back? Nothing. Not a thing. Zip zero, stingy with dinero, to quote the billionaire Jay-Z. So, I mean, this program is going to allow you to put 25% of that monthly away, and position you for to get into home ownership. All right. So you build your down payment from that 2% that you paid initially to their goal is to really get you to 10% over 3 years. So the way the math works, over 3 years you'll end up having 10% of that initial purchase price. So $150,000 home, you'll have $15K saved up. That's for as a down payment. Right now, you can take part of that $15K. If you don't want to purchase that home, you'll get some of that back. But now you'll still have money to put down in a down payment 3 years later, and position yourself for better. All right. In fact, now you can buy your home back at any time during the 3 years. So you can buy that home back at any time where you feel like, because you can save additionally. You don't have to just use a divvy program to save money. You can still save. So now you can buy that home back. All right. If you change your mind at the end of the lease, you get 8.5% cashed out instead of a 10. Right. That's the option there. So if you change your mind, all right, rather than getting that 15%, that 15,000, you'll get 8.5 back. All right. And because basically the difference is it goes to divvy to help them remarket that house, fix and remarket that house for somebody else. Because I mean they're obviously in the business of making money. But still, I mean, look, you're able to save 8.5%, over that 3-year period. And you can't get mad at that, because quite honestly, I mean, if you could do it, sometimes we need to push or protect ourselves from ourselves. That's all I want to say about that, because quite honestly, some folks have the discipline to do it. Some folks don't. I think there are times when we have to be honest with ourselves and decide which category you fall into. All right. And if you fall into the category where kind of you don't have those habits built, there's nothing wrong with that. But recognize it, recognize who you are, recognize where you are, right, and recognize that you need help. There's times, look, I really need a coach to work on this body because I don't have the personal discipline. Now, financially, I have the financial discipline to save money, right? But not everybody does, right? So not everybody does. So there's no knock on you. It's just understanding what your skill set is, and doing the things you need to do to improve yourself to put you in a better position to do what's right. And at the end of the day, getting into a home, I feel like a televangelist on this, but no, getting into a home at the end of the day, it's a financial decision that will impact you, impact your siblings, impact future generations, so your kids. If I go back to kind of the first slide, I usually I start with when I do a home buying seminar is this chart right here. Some of you guys have seen it, but it starts off with the key benefits of home ownership. All right. Now, this lease to own program does not get you those benefits now, but it does set you up so you can get them when you're ready. All right. You'll still have that happiness that comes with home ownership when you're ready in the 3 years when you're ready, or before when you pull the trigger on purchasing that home. Then you'll get the tax savings. You'll actually get the benefit of the appreciation because that price of the house is going to be set in today's money. All right. So 2020, that price is going to be based off 2020, and then in 2023. The idea, if that market is up, you'll get the benefit of the lower price point that you set in 2020. Right, so you'll get the appreciation. The equity that you'll gain is really going to be from the savings that you're putting in the bank. So you're not paying off on a property, but you're saving money there because part of your lease payments are going to your savings. All right. Still be able to establish roots in your community, and the end, you want to create that generational mindset, that generational wealth, because your kids, they say kids that are in homes that their parents own are smarter. But the other side of that is kids whose parents own homes, they tend to be homeowners. All right, so you're setting a trend for generations down the road. I want, my dad owned his home, so I definitely, growing up, felt that home ownership, even though I went kicking and screaming, I tell everybody, into home ownership, it was definitely the right thing for me to do. All right. Now, let's talk about the process. Right, the process is pretty quick. If you go onto my business page, look at that live. I have a link here for a program. Inbox me. I'll send you a link for the program. I need your email address. I need your contact info. So inbox me, and I will send you a link for the program if you don't want to go to my business page. But day one, we get you pre-qualified. Step two is you'll be conditionally approved. Assuming that you meet that criteria that I mentioned about, FITCO being at least a 550, no delinquencies, the bankruptcy, no bankruptcies, or the bankruptcy discharged about 12 months ago, eviction discharged about 12 months ago, and the income threshold. All right, so by day 7, you can have a pre-approval for the program. All right, your credit checks, good. They're not going to do a hard pull. They're going to do a soft pull. That's important too. So it really takes you no time to fill out the form, and they're going to do a soft pull so it doesn't impact your credit, right? It takes about 10 minutes to fill out the application. Do that at home, and give me a call. I can reach out. I mean, I can help you with the information, or if you're stuck on something, I could definitely help you with that. All right. Hey guys, go into my inbox, go into the comment section. Let me know your thoughts about this live. This obviously is something, it's a work in progress. I'm going to be doing it uh, once a week. Right. Let me know about if there was any issues with the video quality, the sound quality, topics. I would love for you guys to inbox me any topics you want to hear. I've talked in previous ones, I've talked about the buying process. I've talked about the selling process. All right. This lease to own, quite honestly, I think it's a natural fit because I know that a lot of folks are challenged right now to purchase a home. And they want to get over that hurdle. So I mean, this is why I felt when I came across this program, I felt that I got to share this with you guys. I got to share this information to let you know there's other programs out there. Home Partners of America has a program. Trilio has a program. So hit me in my comment in the comment section, or hit me in the inbox. Let me know that hey James, I think I'm ready to do a lease to own. If you're probably within 4 months of renewing your lease, this might be a good option. And quite honestly, I'm gonna look and see whether or not we can actually get you pre-approved for a loan. Because I'd rather have you purchase a home rather than do a lease to own. But you know what? I mean, like I said, you know, um, you know, there's many ways to get towards your goal. Sometimes you got to take the direct route. Sometimes you got to take a more deferred route. But the objective is to keep on trying, put yourself in a better position, and look for opportunities that are going to allow you to eventually become a homeowner and get with those benefits that come with home ownership, benefits for you financially, benefits for your child, for your kids, yeah. And I mean, progress yourself, right? You can't live from check to check. Uh, Owning a home is almost like having another savings account, or another way to invest and grow your personal income while you sleep. We all go to sleep somewhere. You know, I'd rather be your place. Uh, that came out strange. I'd rather you own a place where you sleep and get the benefits of home ownership um, versus renting a place. But this lease to own program, the only reason why I tout it is because I think it helps you it gets you transitioning from the renting side to the owning side um, in a matter of time. All right, conditionally approved, which is the second phase of this process. That means your income checked out. Got to upload one bank stub, one bank statement. Excuse me, one pay stub and one bank statement. And I guess the tool on their website is pretty fast, so that'll help you with that process. You can write a check for your 2% down. All right. Send us the bank statement. No seasoning required, so it does not like it has to sit in there for a while. Basically, once you put down your 2%, you're ready to make an offer on a house. I mean, it's that simple. So, yeah. I don't know. All right. So, I mean, that's going to help position you for things down the road. All right. Now the program is very easy. So we're running out of material really, because quite honestly, it is very It's a very simple, very simple program to get into, very simple program to get approved. There's no application fee, so it's not something you're going to have to come out of pocket for to find out whether or not you qualify. All right, so hit me in my inbox. Let me know that that's something that you're interested in, and we can explore that in depth. We can always explore purchasing a home. So, I mean, I really think it's a good program for the customer because, quite honestly, again, the highlights being that you can choose your own home. Right, and that's the big benefit. You can choose your own home. 25% of that rent comes back to you towards for future savings. You get cash back even if you don't buy. So 10% if you buy, 8.5% if you don't buy. No fees, no closing costs, only the rent going towards the house. I mean, it's a layup if you're renting now. The rental portion may be a little bit higher than renting renting today, but you also keep in mind 25% of that rent is going towards your savings. So it's really forced savings for you. Right? They got a couple scenarios here. Let's say take a look at a customer example. All right, typical customer, husband and wife, they make a total $50,000 in income. 2-car loans, personal loan, etc., about $500 a month. Maximum payment that they will figure out is going to be about $1,600. Basically, they're taking they're calculating what you could pay, based off of that profile. Now, $50,000 not a lot. 2-car loans and personal loan at $500 seems a little bit low, but I mean, if they come up, they're going to figure out what your budget is for this process. Now, 1,600 is is a steep payment, but not steep payment, but keep in mind only 25% of that. Excuse me, 75% of that goes towards the rent. The 25% of that goes towards your savings. All right. Program varies by neighborhood. So $100,000 home in College Park may be equivalent to $25,000 home in Stone Mountain. Both will be priced at about $1,400 a month. But we'll work on the individual scenarios as if you guys apply for this program, we can dig out and we'll figure out whether or not it's for you. I mean, I think quite honestly, what I wanted to convey to you guys is that there are options out there to get you into a home, right? Other than the traditional options. So let's talk about, let's recap on the traditional options of buying a home. All right. So like if you go down that path on how do you buy a home, the first steps are always going to be to have a buyer's consultation with myself. All right. So what I would need is for us to get together, get some time on your calendar. Prefer you come out to my office, but we can set a time and we can do it in the Starbucks. I've done that several times. We just met at the Starbucks. Just want to have the opportunity to chat with you and review the process on how do you get into a home. All right. And, it's a process that's fairly simple, one that's repeatable, that I do it all the time. But really, the first thing is really just kind of sitting across from you, getting an understanding of kind of who you are, and understanding your motivation on why you want to get a home, because that helps me. It helps me make sure I find the right program for you. Helps me that I look out for the right features for that house. If you want to get a home because you want your son or daughter to be in a certain school district, then we got to search in that school district, right? And we got to narrow your criteria because to that area. Um, if you're looking for a home because you want your commute to be shorter, then let's go ahead and let's not look at things outside of that area. As you go to work. I had one client that kept on giving me things that were, you know, um, further out than where he wanted. Then the complaint was always like, oh, okay, well, this is too far out. Well, we got to narrow down that focus. We got to make sure that when we start looking, that we're looking in the right area. All right. Second step is always going to be to get you pre-approved for a loan. All right. And this is something that you can't shy away from. I know a lot of folks do not like to expose their financial life uh, to someone, but keep in mind you're exposing it to a professional. But this is what they do every day. This is what I do every day. I'm not so much worried about your credit. I'm not so much worried about how much money you have. What I'm worried about is, do you have enough? Have you met the threshold in order to get you into get you down this path, right? And if you don't, I'm going to recommend, that hey, maybe we need to find, help somebody. Find somebody to help you with your credit. Like I mentioned, I have another client that, again, credit was in the fours, and he was able to get his credit up to 695. So in a month here, he's going to be ready to go out there and take a look at homes. He's still working on his deposit. Right, but you can do it. Not stranger things have happened. I want to say that, but you know what? You can do it. It's going to require you to be dedicated and focused towards your goal. I'm definitely looking to be your teammate as you go down this journey. I know the various loan officers I use are looking to be your teammates, right? And I have a variety of loan officers I work with. And the reason is because everybody has different skill sets. Every company has different things that works better for them. Different clientele that they're trying to get. And I have some that focus on down payment assistance programs. I have one that has 100% program, right? But it's targeting various areas in Atlanta. And you have to have certain credit threshold profile for that. I have ones that they don't do any down payment assistance. They're looking for what I call A1 or that middle credit. Where they you have savings put away, you have a higher credit rating. Right, and that may not be for everybody. May not be able to fit you in that box. But my objective, I'm more like a point guard, right? I'm going to make sure I connect you with the right resource that fits your objective, right? Let me say that again. I'm trying to connect you with the right resource that fits your objective. I've had, clients that came in, and, one of my lenders said that, hey, I can't do it. I can't underwrite them. All right. And, I was able to find another lender that could. All right. When you sign my agent agreement, I become your advocate. I become, you are my client. All right. So my job is to leverage my resources to get you what you need and to give you the right advice to get there. So that's what I try to do as your agent. So first step, meet with an agent. We're going down the buying process now. So first step, meet with an agent. Second step, get pre-approved. Third step, search for homes. So I do have an announcement to make on that search for homes, right? If you go to, in fact, everybody that's listening, check out my new website. It's jamespetersjr.com. I'm going to say that again, jamespetersjr.com. All right, go on there and set you up an account. That's going to allow you to access the FMLS and the and the Georgia MLS that's available here in the Atlanta area. Right, these two MLSs really for most agents, most times when you get put on when you get home sent, you're probably seeing one. All right, you'll probably see duplicate properties there because we as agents we tend to list in both services, right? But not all the time. Sometimes there's an advantage to listing in one versus the other. All right, and you may miss out on homes because you're not seeing both. So if you're definitely in the search in the market, go to my site, jamespetersjr.com, and set up an account. Now, I don't need you agents to go there. Don't be wasting my time. But but for folks looking to buy, if you're thinking about selling, go there as well, and inbox me because I would love to come out and give you a free CMA, a basic comparative market analysis. Sit down in front of you and give you an idea of what the homes that have sold around you in the last couple months, what they look like. I'm able to pull that information and show you, kind of how clean they are, what the look is, and that's going to help you position yourself to sell your house. And then if you want to buy, again, I can sit down and have that conversation on what that path to buying, whether you're trying to upgrade or downgrade. Sometimes, hey, sometimes life, allows you to say, hey, you know what, let's get a bigger house. And sometimes you really just want to say, hey, you know what, I want to get another house, but I don't want all the work. That's what I did. I went from a single family home to a townhome when I moved to Georgia because, quite honestly, I was done with cutting grass. I am going to purchase another house this year. Probably an investment property. Well, I'll probably move into that property and then rent out my current townhome. Um, that's the objective. I probably will get a ranch. It allow the option of having my mom move in from Florida. She hates climbing upstairs, and you get older, those stairs don't look as fun anymore. So get a ranch that would allow her to move in as an option. All right. So that's part of my goal. So going back down. So meet with a real estate professional. Get pre-approved. All right. Search for homes. JamesPetersJr.com. Go check it out. All right. Once you are on that site and you say, "Oh my God, James, I love this house," you hit the little heart favorite at, and then we get together and we go out and look. We find that perfect house. You say, James, let's write an offer on this one. All right. A couple things we need to have, make sure you're ready for before I write that offer. You got to be within that offer, earnest money. In fact, I'm gonna go through the contract itself. No, that's not it. All right, I should go through a buyer's agreement. But really, you have in the contract, it's going to look for, earnest money. Earnest money is 1%, typically 1% of the purchase price of that home. All right. In some cases, we can do lower, but really, you're looking to make a strong offer. You're looking for 1%. So again, if that home is 100,000, you want to have 1,000. If it's 200,000, you want to have 2,000. Right. It's not money that you're throwing away. It becomes part of your down payment, but it's an indication to the seller that this guy is serious about purchasing this home. Excuse me. So you need to have that available. All right. And in the case of buying a house, it needs to be in an account where it's coming out of an account where your loan officer can see it, because they're going to look to make sure that they see that once they're processing your loan. All right. So, it needs to be in a very clean account. Take it out of here, not one that has, a lot of negative things in there. Don't give me that. Don't take it out of that account. Take it out of a nice clean account. They want to see that it's been in there, it's been seasoned. All right. So earnest money, right? Well, now, if the house is valued at 200,000, things I'm going to look at. I'm going to look at how long that house was on the market. All right, we're going to look at that. All right, we're going to look at the competitive nature of the market. Is this still a seller's market? Are there going to be multiple offers on that house? All right. If there are going to be multiple offers on that house, we may have to get a little more competitive price point wise. All right. So, and what that means is that it may behoove you to be looking, if you're approved for $250,000, you don't need to be looking at 250,000 in a seller's market. We probably need to make you down, look down at 230, because we may have to go up a little bit in terms of the offer in order for you to secure the house. All right. I know everybody's looking for their agent to cut out money out the deal and find me the best deal, but quite honestly, a lot of it is dictated by the marketplace that you were in. All right. If you want to win, don't ignore those marketplace factors. All right. A good agent is going to tell you, hey, you know what? This is a seller's market. You will not win this house trying to discount everything. Right? Sometimes you have to step up in order to get what you want. All right. So keep that in mind. Keep that in mind. Not all the cases, and I'm definitely, I'm trying to, again, as your advocate, my objective is to help you win. All right. But I'm trying to tell you what's going to win. I'm definitely going to be that sounding board is going to say, hey, you know what? This is what's going to take to win. You tell me, hey, James, no, I'll do what you want, but I'm also going to tell you that, hey, I know that's probably not going to win. And if it does, I'll tell you when I'm wrong. If it doesn't, best believe I'm going to tell you when I was right. So anyway, wow, this hour's gone fast. It is 6:51, and I'm looking at not as long. I haven't even gotten through the whole process here, but give me your thoughts on this segment. Give me your thoughts on what I was talking about earlier about the lease to own program. Give me your thoughts on what do you want to hear as I continue to broadcast. I'm gonna try to do this once a week in 2020. Now, granted, life happens, and I won't be able to do it all the time. And I run into some conflicts during, because it's a commute hour. I definitely run into some conflicts. I have clients that want me to take them out and show homes, and there's times where I definitely need to go out and do that. But I'm gonna try to keep this time available. Like I said, I'm going to bring on some guests, and I'm trying to do this from a remote location a couple times, maybe in a couple models that we can show off the model and show off what inventory is available in various areas around town. So anyway, really appreciate your feedback when you give it to me. This is James Peters. I got another 7 minutes. So I wish I had some music here to play. That's the downside of not being in the studio. But feel free to reach out to me if you have. I love your referrals. That is the lifeblood of this real estate business. Is to get your referrals, right? To get the folks that your friends, your family, your coworkers, your church members, or just Joe Blow off the street. To get your referrals to say, hey, you know what? If they're in the market to purchase a house, a guy that can help them. All right. By the way, if you need custom window treatments, I do that as well. You guys, I still have that business, the We Got Shutters business. But my primary focus here in Atlanta is real estate. I'm really glad you guys can join me. Who's joined me for even? I know you guys joined me for part of an hour or part of a time. Hopefully, I wasn't rambling too much and kept to the script. I'm working on minimizing my ums, you know, those filler words, working on presenting content that is going to be valuable to you. So please, please, please give me your feedback about the show. I got about 6 minutes here. Hit me and jump into my inbox. Jump into the comment section below and give me your feedback. Really trying to grow as an agent, really trying to grow as a professional, and want to make sure that I'm communicating to you guys good content that will be valuable. Give me your feedback about this during this broadcast at this location. Hopefully, I wasn't uh, too bad to you guys to stare at. Hopefully, the lighting was fine. I'm trying a few new things, and hopefully you like I said, you're getting value from stopping and watching my show. Really appreciate it. As we enter into 2020, like I mentioned at the beginning, I have some lofty goals that I want to achieve, and I cannot achieve them without your help. My objective is to help 60 families this year, so it's 3 times my achievement last year. And I want to do this not so much, obviously the money is good, but I feel that there's need, especially in the African American community, to get us into home ownership. Right. Most of some of you may know that my father is a minister or was a minister before he passed, and he had a different ministry of saving souls. But my objective is to help folks and to help create that generational wealth. That gap where it's missing. I mean, a lot of times our parents didn't talk to us about home ownership. So it's definitely one vehicle that I want to make sure I share with everybody. I'm going to have like I said, have some resources in here. I have one gentleman that's in my office. I know he's great with private investors. So we'll chat about that, what that looks like. I met a gentleman the other day that actually is into doing more crowd sourcing, getting folks together to purchase investment properties, and that may be something we'll talk about. I have a couple great brokers. My broker here, CC, the broker from my last location, Terrell. I would love to have them on to help folks understand what it takes to become an agent, share some information on what the steps are if you're looking to get into real estate, whether it's full-time or part-time. Would love to be your sponsor and help you with that. Kind of tell you why Keller Williams is different and the ways you can profit from being a Keller Williams agent. So definitely have some content I wanted to share as the year goes on. This is a great way to end 2019, and to start 2020. My next broadcast. Maybe we'll chat about. Maybe we'll do a vision board party. I don't know. Actually, I did one the other day, and it was very helpful in helping to write down what my goals are. And still got to finish it, but I think that getting an idea of where you want to go and figuring out that roadmap to get there is very important. It's something that we don't take time to do as much. But if you want to be successful, you got to have goals, and you got to be aggressive in going after them. But you also have to set goals that, quite honestly, if your goal, if doesn't make you scared, if your goal doesn't make you uncomfortable, if your goal doesn't make you nervous, then it's not big enough. I'm a big believer of that. Set big goals. Set big goals, set big goals, set big goals, and go after them hard. Go after them like your life depends on it. All right. The objective is not so much hitting the goal, right? You want to stretch yourself to change who you are. So now your goals are realistic because you became a different person. So anyway, we're going to be signing off here. I want to keep you guys to an hour. I appreciate you guys joining in. Mary West and Zach, you guys, I appreciate you guys joining in. Once I launch this so save this, come back and check out the entire broadcast. So like I said, I'm going to save it on 2 platforms, on my business page as well as on my Facebook page. Business page, you guys are getting the side view. Maybe I can change that next time. Probably should change it like this so everybody gets the front view. Of course, I wait till the last minute to do that. But anyway, at any rate, it's 7 o'clock. I'm signing off. I got some work to do. I got some contracts to get out. And appreciate you guys taking the time. Take care.